Call us to order. Okay, I'll go ahead and call us to order. Thank you. Could we go ahead and please call the roll?
Can do, Madam Chairman. Commissioner Pope,
Here.
Commissioner Wallace,
Here.
Commissioner Navas,
Here.
Commissioner Revel,
Here.
Commissioner Meyer,
Excused? I think he's planning on being here though, right? Okay,
Governor Gordon,
excused.
and Chairman Racines.
Here.
Madam Chairman, you have a quorum.
Okay, thank you. Proceed.
Thank you, Madam Chairman. So as usual, I will start with our quick announcements. Agendas and sign-in sheets are outside of the room. If you are here in person, please do fill those out. And then my disclaimer, key decisions pertaining to the Wyoming Stable Token Initiative will be made by the commissioners of the Stable Token Commission or the state legislature in public meetings such as this. Further, the only commissioners are those appointed by statute, the governor, or a majority vote of the commission. At this time, Wyoming Stable Tokens, including the Frontier Stable Token issued by the commission, are not available for purchase by the public. Smart contracts for the FRNT or Front Token have been deployed on mainnet Ethereum, Solana, Avalanche, Arbitrum, Base, Optimism, and Polygon blockchains, and smart contract addresses are published on the Commission's website. As such, any website or platform claiming to sell or distribute Front or Wyoming stable tokens should be considered fraudulent. Please do not attempt to purchase tokens from unauthorized sources. Information outside these public meetings should only be considered factual and legitimate if it is distributed through our official channels. At this time, these are limited to our website at stabletoken.wyo.gov, the Wyoming Legislature website at wyoleg.gov, and our social media channels with the @WyoStable username on Twitter, YouTube, GitHub, and Warpcast. Madam Chairman, with that, I am happy to review today's agenda and then proceed with it.
Go ahead.
Thank you, Madam Chairman. So today will be similar to last week, mostly focused on updates to start. Then we'll segue into a few demonstrations of the technology that we are building. We'll have testimony from Joel Shell, who is the Converse County Treasurer, followed by two perhaps more in-depth reviews. One for our token management rules, our public comment date for those rules, public comment period rather, for those rules came due or wrapped up on November 6th. So we'll be reviewing those comments and our responses to them. And then we'll be reviewing what we refer to as the listing exchange policy, which is something that we've generated as a result of talking to a number of our licensed service providers. We'll discuss some of the upcoming next steps, the meetings and events on the horizon for us, and then we will segue to public comment. With that, Madam Chairman, if there's no questions from yourself or the commissioners, I am happy to move forward into the meeting minutes.
Go ahead.
Thank you, Madam Chairman. So in front of you, you have the meeting minutes for our prior meeting of the Stable Token Commission, prior regular meeting of the Stable Token Commission, taking place on October 21st. I'll just review those quickly. We had, again, our standard updates of approving minutes, reviewing the budget, inclusive of a bit of a dialogue about gas fees on blockchain networks. We reviewed our 2026 meeting memo, and we've since put those meetings on the calendar. We provided a verbal update on the budget submission process for BFY 27. We'll talk more about the biennial filings in detail this morning. Provided a update on the token management rules that at that point in time were in flight for public comment. And I then spoke about the select committee testimony I provided in late September, the amendments that the Legislative Services Office in the select committee had already drafted, and some other potential amendments that we may have along the way before the December 15th meeting of the select committee. And that was the recap.
Great, thank you. And I appreciate you noting that where that meeting was adjourned unexpectedly. I appreciate you following up and providing that video update for anyone who watched it. So with that, are there any corrections or amendments to the minutes? And if not, I would entertain a motion to approve the minutes from October 21st.
So moved.
Is there a second?
Second.
Okay, any discussion? Okay, all those in favor?
Aye.
Aye.
Opposed? Great.
Thank you, Madam Chairman. We will proceed. Up next is the monthly budget review as of October 31st of 2025. So as usual, you have two big pieces of paper in front of you. The one that is slightly more legible is our budget summary. So to take this from the top, as usual, one of the main drivers of our expenses per month are personnel expenses, so salaries and benefits. Those again have been stable since roughly the beginning of this year, although there has been some month-to-month decreases in Social Security payments that I'm monitoring. The second tranche here is travel. The team has candidly been doing a good amount of travel and also playing a bit of catch up on the reimbursements from September. So in October, we captured travel to the credit union Max conference, where our CFO, Joseph Saldana, attended to speak to one of the credit unions about the stable token effort. Reimbursements from Korea Blockchain Week, meeting with members of the National Assembly there, and Singapore Blockchain Week internationally, as well as the domestic travel to Commissioner Naves attending the Money Transmitter Regulators Association Annual Conference and the DC FinTech Week, as well as our team, that's what I missed, as well as our team, Steph and myself attending the Wyoming Global Technology Summit. So
Yeah.
we had commissioner travel, team travel in and out of state. So you can see those line items there, but I will note that I've highlighted that we've put a team moratorium on travel through the remainder of the year and through this session, between getting the token out the door, between the holidays, and then the budget session kicking off on February 6th and running through, we'd expect to be about mid-March. We've put a moratorium on that. Of course, if there is important travel we need to do, we could of course take a look at that. But in the interim, we're planning to stay put for the time being as we get this out the door and get through the budget session.
Madam Chair,
Go ahead.
just a quick question. Does that include potential travel from our remote folks here in case they are needed for during the session for any purposes?
So through the chair, Commissioner
Go
Pope,
ahead.
they are certainly, if they're asked to be here by the legislature, they will be here, full stop. But I will note for those listening in that we do not lobby as an agency. We're part of the executive branch. That is not our responsibility. We simply educate. So if people want us around to be educating them on what it is we're building, how it works, how it can be used, we are more than happy and quite thrilled to do so. Thank you, Commissioner Pope. Moving on, we also have another line item here that's highlighted in red. This is a miscellaneous item under support services, which was simply the categorization we got from the A&I accounting team on this of just under $700,000. This is $699,924.74. I'm happy to let you know that is not an expense. That is simply how Wolves characterized the movement of our agency funds out of the state agency pool into the trust accounts at our custodian, Franklin Templeton, or Fiduciary Trust Company International, which rolls up to Franklin Templeton, for the purchase of Frontier stable tokens for the purposes of front-to-back testing of the token lifecycle. So in other words, just to quickly contextualize that, we've taken some of our agency funds, bought tokens as any one of our licensed service providers would or end users could, issued the tokens. That's allowed us to refine all of the forms we have internally for issuance and redemption. It's allowed us to get a sense of the processes to take dollars out of the state agency pool and put it back in that pool through the wiring process, get a sense of what the timing looks like, what the fees look like, and start building out our attestation report, which we'll talk about momentarily. But it's an important step for us to get that done. And the plan is to have these funds fully reverted back to the agency in 2 to 3 months. That has already started. We pulled about 5% out earlier this week. And again, there was an analogous token burning event taking place with that.
Madam Chair?
Go ahead.
Just quickly, a little more context. That is nothing more than an asset transfer and a transfer between two separate assets allocated within the state's system to assets held within the trust, correct? And so if we're going to show it as an expense, I mean, this goes against every accounting principle I know, but it should be shown as income too. If it's not shown as an expense, it can be a noted transfer between assets. It should not be listed here as an expense. And so just think that context should be added.
So through the chair, Commissioner Pope, our team would agree with your position on that. Again, this is the expense the state's tracking through the Wolf system, right? So we understand that there are many things that system can do. We also understand that there are some limitations for us in what we're trying to do. If we were to do it in the system, this is one of them, right? The inability to recontextualize an asset moving from one pocket to the other as anything but an expense is a problem that we've seen here. That being said, our CFO, Joseph Saldana, has been working to stand up redundant books that would be for the agency in totality. So where this is not classified as an expense, it's just a movement of inventory, right? So that is still being put together. We're doing a lot of candidly minutia around that, tracking the gas fees that have been spent. We're working to consolidate information from multiple service providers, including Fireblocks, the information I could pull from the wallets that we're using to test the transfers. All the data is a little different. It's not standardized. So it's a lot of work that Joe's putting in on that. But once that effort is done, I expect this to be something we would have before the end of the year. As we move into the calendar year end, we would have a full set of books that is fully reconciled on our side that
Madam Chair,
recognizes all this.
follow up, please. Thank you, Madam Chair. I would like to also be clear, the fact that the agency has its own set of books is not uncommon. It is, as a matter of fact, common for agencies such as yours throughout the state, correct?
I'll pick up that a little bit. And I think this is not something to be concerned about. It's not the way these reports are pulled, that amount of money goes in the same place as an expense, but it is not an expense per se. I mean, whenever money is moved outside the state of Wyoming system, it does have to be recorded. Because this is not unique or remarkable compared to lots of other agencies. And I would note that the Treasurer's Office holds, they're constantly taking money out of this, and we do have to track that. So it's if you were to pull reports other ways, it's not going to be shown as an expense, but it is a movement of funds. So I think it's not an issue from that standpoint.
Madam Chairman,
Go ahead.
and I think this isn't I think something we have to do right away, but if we could ever get the structure that the WCDA has, essentially they're totally off the books, don't have to go through wolves. And that's instrumentality. And at some point in time, that's I think that will be where we're at as soon as, when we get moving and things are actually working, and we're I think that in a year or two here, it might be a good idea to move it into that, because hopefully it's going to get bigger than we can anticipate. So thank you, Mr. Chairman. Madam Chairman.
So, Madam Chairman, and just quickly addressing the point from Commissioner Meyer, we've certainly talked about that a few times along the way. We've also started looking into what that looks like more tactically, and Madam Chairman has been a great shepherd through that process. One of the reasons why we're kind of creating a redundant set of books is to espouse that trajectory, right? So that once we can be independent, we'll have a set of books that's already reconciled what the state has been doing. But I do want to be clear, if we were to go that route, that means that the state needs to take on the responsibility of all of the salary payments, the benefits. We have to take on all of that responsibility, which is candidly not something that we're looking to do as a 5-person team trying to get this thing out the door. But in due time, once things stabilize, we talked last month about these recurring meetings, truncating them in 2026, having redundant reports that we could deliver amounts of automation that we could implement into the processes we have, I think we'll have more time for things like that transition.
Madam Chair.
Go ahead.
The only thing I want to hit home with is because these are a representation of the expenses. I want to make absolutely certain that that my thought is that these are, I don't want to say flawed, but they are certainly not something that can be looked at and just understood without that particular note saying that this was not an actual expense. This was a transfer of assets. And I don't want anybody to misunderstand what happened with that. So I wanted to make sure this was on the record, this discussion, that it is not an expense, and in my mind should not appear on these statement of results or statement of expenses for the month. So I thank you for being patient with me on that.
To the chair, Commissioner Pope, thank you for the feedback. I mean, it's a perspective, right? And again, the perspective that's shown here is our reconciliation to the amount of dollars that have been taken out of our state budget fund, right? Our appropriation, right? So this is going to have a material impact on when we look at how the payments we need to make back to the state to essentially extinguish our obligation once we start generating dollars. These are important considerations. Again, this will be zeroed out, but I think what you've done candidly is set me up to segue over to the attestation report, where we could certainly talk about what that $700,000 is, if that would work for you, Madam Chairman. Great, thank you. So I am very excited and quite proud of the work the team has done. We have put out our first monthly attestation report over the reserves backing the Frontier stable token. This is another reason why we wanted to move some of this funding and do a token purchase ourselves to get these processes started and get the foundation set up. So as we scale, that's already in place. And I do believe we're the first state agency to ever put out a digital asset report of this type. So again, I think we've contextualized the 700K well, but just to walk through what the report is, page 1 is the independent accountant's report. So this is from our partners at the network firm who we engaged through the procurement process. Just to quickly walk through the paragraphs. First one, what and when they examined our reserves. They talk through the AICPA standards that have been applicable. And they also talk about what they have and have not tested. So you'll see in paragraph 1, 2, 3, 4, last sentence, they did not test the operating effectiveness of controls and do not express an opinion on controls. That is a separate engagement we have with them that'll be run a few months into this process. However, if you go to the bottom, it is their management's opinion that our assertion that the fair value of reserves held, aka the amount of dollars we have in the bank, is equal to or greater than the amount of front in circulation in accordance with the criteria defined in the accompanying reserve assets report as of October 31st, 2025 at 5 p.m. MT, and that's fairly stated in all material respects. So we consider this to be a clean opinion on how we've set up the fund and how we've started contributing to it. So moving on to page 2, and again, these are our management's assertions. You can see that as of October 31st, we had 700,000 Frontier stable tokens in circulation, which are expanded upon Appendix A. The fair value of the reserve assets in that trust account is $700,000. So again, that's the one-to-one backing. And then separately, we have the liquidity fund account where we capture that over collateralization. And based on the interest earned between mid-October and the end of October, generated about $1,758.41. And then the rest of this reserve assets report on page 2 and 3 is the notes from us as management. Again, asserting that, I'm sorry, Commissioner Meyer.
Yeah, I guess the question I have is that when we start getting redemption, is there another line there that has basically a I don't know, accounts payable or liabilities of in that regard?
So through the chair, Commissioner Meyer, that would be correct. So there'd be a line for the amount redeemed, kind of full stop. And then if you look at, jumping ahead a bit, on page 5, there's a footnote 4, that talks about any of the differences we may have and adjustments that may be required from deposits or withdrawals occurring after the bank statement cutoff time, but before the report date and time. Transfer between the Wyoming Stable Token Commission to recognize accounts receivable and payable between the trust and liquidity fund accounts, which we'll go through in a minute. Facilitating the issuance and redemption of front, which is what you just mentioned. Securities purchased sold the last day of the reporting period that settled after the report date and time, or interest received and payable, unrealized gains and losses. So there are some carve outs there. And as those crop up, they will be included. For now, we don't have any, but
Right.
that'll be the intent.
Yeah. Yeah.
Okay.
Yeah, page 5 gives you a more complete picture, I think, as
Yep.
as a structure, yeah.
Yeah, so the body of this, the reserve assets report on page 2, is meant to be kind of the summary level. And again, we have these notes here to contextualize everything. I think the commission knows all of this quite well. How we define front and circulations from our reserves rules. We're partnered with Fiduciary Trust Company, and they use Bank of New York Mellon as a sub-custodian. We call out in note 3 the difference between the trust account, which is again held one-to-one for the benefit of the token holders, whereas the liquidity fund account is commission funding. We do not have FDIC or SIPC insurance for the account, which we'd be beyond anyway. And then notes 5, 6, and 7 all tie this report back to statute. So one of the key efforts we did on this was taking what can be sometimes a kind of boilerplate attestation and really imbuing our statutory framework into it to make it quite clear how we operate, similar to other stablecoin issuers in some ways, and when we're different, how that's carved out. Any questions so far?
Madam Chair?
Go ahead.
Just a comment. This attestation is not meant to be a comment on or an assessment of the full financial statements of the commission. It is meant to take a snapshot at a moment in time and compare the reserves to the tokens in circulation. And so as such, there's going to be, missing information that would normally be on regular financial statements. And so we have to view it just as that snapshot of the reserves in circulation at time, and whether we have enough backing for those reserves. So that, again, just a point of clarification on these, we're not gonna, it's not gonna show a statement of activity, it's not gonna show a statement of income, though there will be, as you see, accrued income noted on the reserves, but we just need to take it for what it is. It is a very valuable snapshot on a regular basis of whether we are complying with our reserve requirements.
And through the chair, Commissioner Pope, I will reiterate on page 1, second paragraph from the bottom, first sentence, management's assertion does not address the assets and liabilities of the commission, right? That would be, this is what we're kind of doing the bridge, right? We got the expenses we've been reviewing throughout. Now we've got the reserves. We're really trying to bring it all together through the financial statements that Joe is working on, so that when we hit, certain points along the next 7 months, we're doing testing of controls, and then eventually we'll have to do an audit over not only the reserves, but the agency's operations itself. And that is certainly the expectation that's part of our SOW with the network firm. Yep, Madam Chairman, Commissioner Wallace.
Go ahead, Commissioner.
Yeah, I'm thinking that's me. So I had just question on the cash of the $76,997. So that's not sitting in like a bank account. That's sitting in a trust account with the custodian. So is there anything, there's nothing pledged or any backing to that other than the money is sitting in that trust? If that number gets too big, I guess, how do we ensure that that one is fully reserved for?
So through the chair, Commissioner Wallace, that is an excellent question. A couple things to note here. So again, we are allowed through statute to custody cash in the trust account, so we can do it. It's not a problem that it's sitting there. To your point, we do want to maximize the interest that we're generating. So for us, when this is our cash, we prefer to hold a lower cash balance and have that invested into the T-bills and the repurchase agreements. That 76 there is a fairly specific number because part of the redemption that we did following the October 31st date was bringing that cash back out and liquidating the tokens that were behind them. So we removed $35,000 from that. So the cash balance in that account now is about $40,000. The goal would be, again, to keep that pretty consistently deployed. But from a mechanics perspective, once we start actually getting issuance and redemption orders in, we'll probably need to keep a slightly larger cash balance, at least in the early innings here, to make sure that we can meet any redemption requests that come in on a timely basis. One of the concerns that I think a few of the commissioners have brought up in the past, Commissioner Meyer, you and I have spoken about this, is one of the concerns is we get huge orders in and then people try to pull those huge orders out as almost kind of like an attack on the program to prove that we can or cannot meet redemptions, right? But the point here is when we're essentially stress testing the platform, we'd keep that cash balance to a minimum. And then we'll need to work with fiduciary trust to make sure, again, that capital stays deployed. One last note on this, and part of this is a lengthy response, but I want to be comprehensive here. Our agreement with the Franklin Templeton apparatus, both Franklin Advisors and Fiduciary Trust, we do have a pair of investment policy statements with them for both the trust account and the liquidity fund account, all part of a kind of a umbrella investment management agreement that dictate to them how to invest these funds. We're not giving them day-to-day instructions. It's not our role, and we don't want to be in a position where we could be seen as an RIA. So we want to avoid that. But part of those instructions do clarify that in the first few months of this program and until we hit scale and kind of stability, we should have a bit more balance in the cash side of things to meet any unforeseen redemptions until, again, we're able to put some metrics in place that allow us to better get closer to the pin every month. Commissioner Wallace, does that answer the question?
Yeah, I think so. But I guess kind of the one point I wanted to get to as well is, when Circle had all the money at Silicon Valley Bank, are we in a position that could never happen to us?
So through the chair, Commissioner Wallace, two responses to that. One of the reasons why the statute was updated through the 2024 Stable Act amendments to better constrain the investments the commission's able to make and what we're backing the token with, we've put that all on the very near term side of things, right? We can't have U.S. securities that have maturity more than 365 days. We can't have repurchase agreements that are more than 30 days. And the SVB issues were due to being way too far out on the Treasury curve at a time where the zero interest rate environment kind of detonated. Now we're at 4%. So that's one mechanism that's in there. The second thing I will mention is the commission did vote, I believe, in our September meeting to start looking at redundant vendors, generally speaking, custody being one of them, so that as we scale, we're not reliant on perhaps one counterparty for all the different things we do, but we have a bit of a mix of counterparties. There's failovers, fail-safes. If anything goes sideways with one, we've got backups. And I will note, again, happy to answer any follow-ons to Commissioner Wallace, but also noting that Commissioner Revel has his hand up.
Yeah, I guess I understand the investment side of it, but, I think we're going to have to keep, if there's a lot of redemptions happening, there's going to be a large amount in cash. And I guess it's just that cash balance that I want to ensure that is safe, that's outstanding while we're doing the redemptions. And I know that there's some other people that have more experience dealing with that. So if they have anything to to add, I would certainly be interested in hearing that.
Well, I will quickly just take an opportunity, Madam Chairman, to respond to Commissioner Wallace on that one. We said the cash is safe. I mean, the issue that other issuers have had in the past were because of the debt positions, not the cash positions. So I do want to be specific about that. But again, I may defer to some of the other commissioners who've been close to the pin on some of this.
Thank you. And so when you say the cash is safe, is it insured? Is it collateralized, or is that's part of the contractual structure?
Right. So, Madam Chairman, perhaps that was what I missed from Commissioner Wallace's questions. Again, this is not an insured account, and it's not collateralized because this is not state funds. So it's not one-to-one backed by the custodian, right? This is for the benefit of the token holder. So in statute, essentially what we say is you can redeem your Frontier stable tokens for $1. We're going to build that over collateralization buffer to make sure we have cash outstanding, right? And really prevent and mitigate the risk of any kind of depegging event that might come through, right?
Okay.
Again, Commissioner Revel does have his hand up.
Yeah. Madam Chairman,
Go ahead.
yes, maybe what we might do is look at a self-insured pool where it goes into cash that we automatic put it in the repos or something, or just some other mechanism. So if we get into a situation where it is a trust or a bank failure, that we've got some collateral some way. I think we could, I guess contemplate that structure with Franklin and see, what they can or can't do. I think $40,000 isn't going to break us, but if you get 400 million in there in cash, then you're looking at, we gotta have basically, and we have times, I think, to address those considerations.
Commissioner Revel?
Thank you, Madam Chair. Director Apollo, can you just clarify? I think maybe I'm misunderstanding, or maybe there's some clarification here that might help. The cash is being held in a custody account by Franklin, is that correct? Or is it being held in a depository institution in some sort of banking account?
So through the chair, Franklin is the manager of that cash. Now that may be with BNY as a sub-custodian. Is that what you're asking?
That's certainly possible, but I think it's worth clarifying, Madam Chair, with your permission, if I may respond. I think that it's worth clarifying here the difference between a deposit account and a custody account. My understanding is that this is a custody account with a trust company, which means that while that institution could potentially fail, the assets are not held on a bank balance sheet or within a fractionally reserved bank construct where insurance would be relevant. Instead, it's held in custody, which is a different contractual arrangement between us and the institution, which is that that institution is not allowed to commingle those assets with their own balance sheet or any other balance sheet. They are our assets. So I think if we could just clarify whether this is a custody account with a trust company or a bank account with a fractionally reserved bank.
Madam Chairman, Mr. Saldana has a hand up on that one.
Oh, go ahead.
Yeah, this is the account is sitting at a custodian and not a deposit account. Just to wind the clock back a little bit, when we went through the RFP process, I mean, we were very careful to select an institutional quality type of organization that would be able to handle not only the anticipated cash flows associated with the agency, but has a long tenure of experience in managing high volume movement of capital around the globe. and Franklin fulfilled all of those requirements. They not only serve it, they will service us very professionally. I don't have any concerns about any failure. Comparing Franklin to Silicon Valley is it's like comparing a horse to a cat. These are completely two different organizations. I will tell you that Franklin, I have no idea how much they clear on a daily basis, but I will tell you that they service institutional accounts like Microsoft, Google, IBM, and they're managing their daily cash flows in short-term funds that need to be maintained liquid so they can fulfill their working capital requirements. They are more than qualified to address the cash flow needs for the agency, not only now, but even if this goes up to a couple of $2 billion.
Thank you, Commissioner Revel, for being able to verbalize the question the rest of us were trying to ask and couldn't quite get to.
Madam Chair, if I may.
Go ahead.
Yeah, so I just wanted to then come back to Commissioner Wallace's question. Commissioner Wallace, then that answers the question, which is this is not Silicon Valley. Why wouldn't this be a risk like Silicon Valley Bank? Banks take legal ownership of client deposits. Trust companies, by contrast, hold the assets separately and solely for the benefit of the client in a custody account. So I think that's the difference here.
Yeah, I should know that.
I was thinking I don't really want to bet on a horse or a cat. So better analogies next time, Joe. That would be my only request. Okay, this is exciting. Anthony, I know that initially we're going to have a monthly cadence of this report. Mm-hmm. Would we also expect the lag time to the report date to be similar each month?
Madam Chairman, another great question. We would expect this to be done much more frequently. So this took, 17 days to get done.
But it's the first one.
As the first one, but again, a lot of that, as I said before, was the customization of getting our statutory framework to fit kind of a standardized version, because we're the first ones doing this, right? So it's all net new work. We also, we haven't talked about Appendix A yet, but we also integrated all the blockchain pieces into this. So our smart contracts are referenced in here. So you can see at the point in time when we took the snapshot, 5 p.m. on the 31st, how many Frontier stable tokens we had on each chain. So that's recorded. We're building the kind of the PBC database with the network firm as we go along. But again, now that we've got V1 done, we'd expect this to get done probably in about a week going forward, at least in terms of getting a monthly report out within a few days. I do want to be forward thinking about this. One of the agreements we have with the network firm, and I'll also mention that Fiduciary Trust has been incredibly accommodating and working towards this goal, is to get us towards real-time attestation. Now that may take us a while to get to every 30 seconds or so, but the goal eventually would be that someone can come to our website, use a widget called Ledger Live, and you could essentially see in real time, here's how many Frontier stable tokens are deployed across all the blockchains we're on, because we have indexers that'll pull that information for us block by block. And then Franklin is helping us pull that data in as well from their side through an API. So we'll get that reporting in too. And then you'll be able to see function real time, dollars in the bank are more than the tokens outstanding. We can customize that, say it's X% over collateralized at this point in time, because we do have that requirement. And we expect that we'll probably do more frequent reporting as we move towards that goal. But that is certainly the impetus for the team here.
Okay.
Madam Chair.
Go ahead.
I would like to recognize that I believe, and Director Apollo will tell me if I'm wrong, this is the very first attestation report on a state stable token ever in the world. Am I correct?
Through the chair, Commissioner Pope, I think I'd go broader than that. I think this is the first attestation of its type for any digital asset issued by a public entity.
I think that you are to be commended. Your whole staff is to be commended, and I appreciate that we get to add this, even though many people may not be as interested in this as the LLC or anything like that, but we can add this to the list of Wyoming firsts.
Well, thank you, Mr. Chairman. It took a lot of effort. I want to thank the team for it, as well as our partners at the Network Firm and Fiduciary Trust. I will also note that Commissioner Navas has a hand up.
Thank you, Anthony. Do we also plan to make available on the website the volume Frontier token issue to each blockchain that has been approved? So there is a real-time availability?
So through the chair, Commissioner Navas, that would be part of the Ledger Live module that we'd be developing. We do, at this point in time, have links on our website to all of the smart contracts we deployed across all 7 chains that we're currently on mainnet. So if anyone's interested in information, it is available through our website. It is not overtly, unless on the landing page, but that would be the goal.
Thank you.
Madam Chair, one last thing for me. I believe it is customary to formally accept the attestation report by the formal acceptance by the Commission of the attestation report. I would like to suggest that we make this a regular part of our monthly meeting. So I will move.
Second.
So I guess my first question is, do we need to do that? Why do we need to do that? And if we move to a more frequent or live model, then what? And so if we can't do it then, which we wouldn't be able to, why would we do it now?
I love custom. And as part of our oversight requirements, we have to look at the financial information given to us. And I believe that at least on a monthly basis, we need to be reviewing both the expense report that Director Apollo shares and any financial information. And I believe it should be formally accepted, noted that we have received it and recognize it, and it has been questioned, and it becomes part of the record.
So then if we were doing 30-second attestations, how would that?
Just have an accumulative monthly.
Okay,
Right.
gotcha.
Yeah.
All right.
Yeah.
That's fine then, I guess.
It's the transparency issue that
Right.
we should be able to bring that other organizations won't or can't.
Okay. I'm just always hesitant about adding things to the list that we don't actually have to do, but I get the point. So, all right, all those in favor?
Aye.
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 Opposed? Okay, carry on.
Thank you, Madam Chairman. I will note we've had one request for Commissioner Meyer to turn the microphone on if you haven't already over there, speaking to the microphone. And thank you for that. Moving on to the next item on our list, the BFY 27 submission. Again, I think we'll move this pretty quickly because as the commissioners, you do have the context for the structure here. So just to quickly put the framing around this, we are in the lead up to our 2026 budget session where the legislature will determine the biennial budget for state agencies. That is the period beginning on July 1st of 2026 and terminating on June 30th of 2028. We do have a budget request. The goal, we've talked about this a little bit already about being an authority, would be to be somewhat self-sufficient in the future. But as we get this thing off the ground, we do have a budget request. I would turn over to page 3 for the snapshot of what the full request looks like. You'll see this table repeated multiple times throughout the document because we are an agency with one division and one request. I will give a bit more color around that as we move, but just be aware that as this comes up, we'll probably just pass over it because we'll go through it once and that should be somewhat sufficient. So for this chart, you can see the base budget request in columns 2 and 3 is based on, although it says 2027 to 28, that is based on the allocation in this biennium, which is biennial fiscal year 2025. You'll see the exception request and the total budget request, columns 4 and 5 are the same thing. Again, this is the first time we've put a formal budget like this forward. You see that there's governor's exemption changes. That's the changes that have been put forth by the governor's office, and then the final recommendation. So as you go through these line items, you'll see that there is the full administrative ask, the full division ask at the top, which we put forth $8.1 million. That is split up into a couple different buckets. The first is the 100 series for personnel. That number is $2,333,936. That is predominantly based on current salaries of the team, as well as the benefits associated as full-time at-will employee contractors. So we're not moving to convert the team to full-time employees at this point.
Why the reduction in governors? Is that just a timing issue?
So through the chair, Commissioner Meyer, that was a promotion that was requested for one employee that was denied, so we can keep everything at current AWEC levels.
Okay.
So that was the 100 series. And then that was that's the only change that was made. So I'll just keep going through the budget request. And then there's no difference from the governor's recommendation. So for supportive services, there is a $2.5 million ask there. The expectation from our side at this point in time is that will be significantly reduced by about 80 to 90% by the time we get in front of the Joint Appropriations Committee on December 12th. That number recognizes a expense that we had expected to be essentially paying out of pocket for engagement of perhaps market makers or other supporting teams. However, based on those conversations, it looks like we'll be doing kind of a net fee based on the amount that is put in circulation by those counterparties. That would be a couple of bips rather than percentages of what's out there or a cost of capital. So if we're able to get that all done before joint appropriations, that would be a great thing to take off the table as we sit down. And I will quickly note that if that number does get greatly reduced, we'd functionally be asking for the same amount of funds that we asked for this current biennium. So we'd be static, which I think is the story we really want to tell, which is also why I think we have that one reduction from the governor's office. The restrictive services 300 series, that is essentially room and board. That's the services that we as an agency take on by being staffed in buildings in Cheyenne. Centralized services and data services that covers off on state IT, like our Google accounts and all of that. The fact that our website is hosted on Amazon Web Services, that is hosted by ETS. So that is what that entails. We don't at this point in time have any grants or aid coming our way or distributed. And then contractual services of 3.3 million is for our vendors. And again, that maps on pretty exactly to the dollar amount we had for this biennium. When we said if we had all our vendors on day one, here's how much it would cost. Now it's taken time to engage them. So we've been very conservative with our budget through this biennium, but that is pretty much one-to-one dollar-wise. I will be specific and say, and we'll get to this contextually later in the document, that we do expect some vendors to be providing more services in the following biennium. That may include, as we're talking about the attestation report, the audit function, right? Because if our first audit is as of date for the audit is June 30th, the end of this biennium, definitionally, the audit fees will be incurred in the next biennium. However, there may be a reduction in payments for some vendors, for example, those who helped us deploy all the smart contracts up front. That work is done, right? So that might be less, but we've worked and socialized this momentum with our vendors to find out what their prospective fees could be in next biennium. Obviously, we won't be doing contracts until we're in that period, but that would be, we feel like we've got good data on this one. And that's really it. Everything else is just summarized. And again, we're keeping everything pretty much the same, minus one promotion, but we did in that personnel, I should mention this, request a junior project manager as well, which has been approved. So those are the numbers on page 4 and 5 and 6. Again, there's context here about the agency overview. You're all on it. I think you've got a good idea. The background and structure, the amount we spent to date, challenges, risks, and priorities. We highlight things and risks like the interest rate fluctuations that may come early next year. Agency successes, everything we've gotten out the door so far, and our launch trajectory here at the bottom of page 5. And then efficiencies on page 6. We've been able to, and I really give a lot of credit to Stephanie Chan here, has worked to automate a lot of these processes through the Notion platform that we use to do the blockchain selection exercise, procurement, and the KYB reviews for our licensed service providers. Page 7 is the org chart. Again, very flat organization here where the team reports to me. I report to the commission and the governor as the executive branch. And then on page 8, we have our proposed performance measures in the upcoming biennium. So we don't have specific KPIs on this, but what we're monitoring to make sure we're going in the right direction is adoption. Are we facilitating use cases that are specific to the Wyoming stable token? For example, supporting public entities and NGOs. Returns, obviously, we want to return funds to the state to extinguish the obligation we have to repay the general fund and then start generating dollars to over collateralize the token, return funds to the agency to, again, become self-sufficient, and then pay for the school foundation fund per our statute. And then we also put technology here as a performance measure. We do have a remit from the Select Committee on Blockchain, Financial Technology, and Digital Innovation Technology to pursue a multi-chain and technology neutral approach. They've done a great job of that. We're already on 7 blockchains. We have 5 other candidates. One of those will likely be rolling out soon on mainnet. But if we wanted to continue expanding that, that would be one of our performance measures. On page 9, you see department priorities. Again, I want to be specific. We have one priority formally because everything needs to work together in tandem. We have on the right column here describe the consequence if the priority is cut. So here I've broken it out into personnel services. If we can't fund the team, we don't have an agency. We have number 2, contract professional services. If we don't have vendors, we can't host a stable token. For support services, enterprise technology, we assume that that is going to include, equipment for the team. But again, if there's cuts there, that would impact that advertising and promotional budget where we've captured that market maker activity. But again, the expectation is that number will be a lot lower. And then if we are not able to bring on an additional resource, that may preclude senior resources from maximizing their time on critical items while we're still doing smaller redundant tasks on a month-to-month basis.
And Mr. Chairman, Madam Chairman,
Go ahead.
why is it 2026 and not 2028? Because this is the 27-28 biennium.
Through the chair, Commissioner Meyer, where are you looking for that one?
I'm over on page 9. You got those unless you achieve break even and profitability, but all of this money is essentially in the 27-28 biennium, and July 1, 2026 is.
So to the chair, Commissioner Meyer, just for clarification, July 1st of 2026 is the first day of the 2027-2028 biennium.
Right.
So if the legislature tells us we don't have a budget, or they make some significant cuts.
If they don't get a budget, then we got to wind down. Yeah, okay, but, okay, all right.
Unless we're self-sufficient
I didn't
by July.
catch that first that if we don't get a budget comment, yeah.
So this is the consequence that the priority is cut, so.
Yeah, well, there's a lot of things will be shutting down if that happens, okay.
Well, we're talking about our budget specifically here, right? So
Yeah.
if we're removed from the budget or whatever happens,
Yeah,
if we get $0 from the legislature from a budgetary perspective, but they don't take the agency away by statute, if we're self-sufficient by then, we can still keep going.
yeah, well, it'd be nice to think that we can, get a cash flow by then, I'm still waiting to where I can list my house in table tokens, so
Getting there, Mr. Treasurer, I promise you.
piece of land that I have out north of town.
Thank you, Commissioner Meyer. Page 11 is, again, a summary version of the table we already reviewed on page 3, so we'll gloss over that. Same on page 12, that is 1 for 1, the same table as page 3. And then we get into, again, the priority ask here. So the governor's recommendation is to approve the budget as submitted. And then we get into an explanation of the request. Again, I think the commission is well aware of what it is we're doing here. The bullet points on this page contextualize the current team. But if you turn to page 14, that the one bullet you have there is the new position. We are looking for a business project management analyst. It's a BAPMO role. And that's part of the classification provided by the Human Resources Department as a full-time AWEC resource, and the position would be posted at MPP, which is the kind of salary classification that they have. And we give an idea of what those tasks are. And again, I do believe the commission reviewed a JCQ for that position some time ago. We then talk about the vendors. We've got 8 vendors on board, what they accomplish, and to the context which was provided a minute ago, there are vendors that may be paid more, less, depending on what their responsibilities would be in the following biennium, which are noted here. We then have a piece about our licensed service providers at the bottom of page 14, first contextualizing what they are and defining it, and then talking about the commercial relationships we anticipate to have with them. We expect that it would be similar to the revenue share agreement based on stable tokens in circulation, similar to the relationship with our custodian and investment manager. However, this budget is put together assuming that we may not have that role and may be paid out of pocket. So that's why we have that additional, the fairly large 200 series line item. But again, if we're able to execute these contracts in the way we believe we can, that would make things much more streamlined for us and much easier pill for the legislature and the Joint Appropriations Committee to swallow. On page 15, there's some context here again about how we back the tokens and the dollars spent to date. Section B here is again just another cut of the request by object code. And then the bottom of page 15 on to 16 and 17 is justification and consequences. So essentially reiterating where we are now, where we're trying to go, and then stating that the lack of funding would result in an inability to retain employees, vendors, or licensed service providers, resulting likely in a de facto wind down of the program. Right? So if we're not funding this or any part of this, it needs to work in simpatico, right? It needs to work all together. Can't have a commission without vendors, can't have vendors without a commission. So it only needs to come together. And there is concern that I have noted here that if the legislature does not fund this based on the interest we have to date, it's likely that another state will take all the work that the state of Wyoming has done and adopt it and run with it. So I've made that very clear through this statement. The rest of this, again, is about the flow of funds and some of the interest rate sensitivity growth modeling that we're doing and potentially lower interest rates in the beginning of 2026. But I think I've belabored this point long enough, so I will pause there for any questions and happy to take them on.
Director, do you know who your assigned joint appropriation person is to present the budget on the floor? No, I'm sorry. I mean, each member of JC is assigned a suite of agencies and they present, when the budget goes to the floor, they present that, and I'm just wondering who it is. You may not know yet. It's a possibility.
So, Madam Chairman, if I'm understanding the question correctly, I will be joined by Rory Horsley in the A&I Accounting Department who helped prepare some of this. And then from the State Budget Department, our representative there is Christine Eminger.
So beyond that point, so after you present it to JAC, if it goes into the budget bill, one of the members of JAC will be assigned the Stable Token Commission to present to the rest of the legislature. And so that's at a time that you can no longer participate. And so it might just be useful to find out who that is.
Madam Chairman, that sounds quite useful. I think I might be more curious about that one than you are.
Yeah. So, and again, I'm not surprised that you don't know yet, but it might be worth the ask. It would be, you would have one member from the House and one member from the Senate.
Thank you, Madam Chairman. We'll certainly ask that question.
Awesome. Exciting. And just for, I know you've said this before, but the presentation to joint appropriations will be on December 12th. Do you need backup?
Well, Madam Chairman, I think I've got it. So everything we have in the budget.
From commissioners, I guess I should say. Do you want any commissioners there, or would it be better if we stayed away?
So, Madam Chairman, thank you for clarifying. The feedback I got through this process last year was there really is an expectation that the director will be really the only one speaking.
Okay.
That's a weekend. We had Rory Horsley there last year from an AI perspective because we weren't even in the iBars system
Right.
last year. We really built this from scratch quite literally. I also will note that we had early support from Mr. Norman LeBlanc in the treasurer's office there as well, because we didn't, at that point, the agency was just myself. So we had some extra context. But now that we have been building this for 2 years, we've got the team built out. I don't believe we need support on the day.
Great. If that changes, let us know.
Will do, Madam Chairman. The other piece of this quick update is the fiscal impact note. That is due in the coming days. That is something that the Legislative Services Office looks for and provides to the legislature that assesses the revenues and expenses generated or administrative impact of any changes to the statute governing agencies' operations. So because we have the Stable Token Act has amendments on it for this year, including the ability to take donations, the ability to leverage a 2A7 fund in addition to or side by side with the basket permitted investments, and a slight change of the waterfall where potentially the commission would be able to pay down its own obligations first before the over-collateralization of the reserves. Those may have some fiscal impact, and our CFO, Joseph Saldana, has drafted that already. We are discussing that with the A&I team this afternoon, and if that is good to go, we will submit it then and there. I will note that those are privileged communications with the Legislative Services Office, both the note and the amendments. So I don't have anything to share with that, but we're on top of it. Madam Chairman, with your permission, I would like to skip over the stable token industry update and the blockchain selection exercise update and go into the launch update and next steps. We do have someone on the line who wanted to testify, and I don't want to get the hour to get too late before we have Mr. Shell on. So if it's
Sure.
all right with you,
Go
we'll
for
jump
it.
ahead.
Any objection to skipping ahead a bit? Okay, go ahead.
Thank you, Madam Chairman. So in terms of the launch update, there are essentially 3 more T's to cross and I's to dot, and we'll pick a third letter that you need to do something else with to get that third one there. But we are looking to get live on an exchange. That is one last technical check that is occurring over our smart contracts, just to make sure that everything is compatible with their systems. So that is underway. We are looking to engage one more vendor and integrate them into our existing technology stack that would allow us to have full visibility into the token transactions that are occurring with the Frontier stable token. And then we've got one support contract outstanding. We mentioned the market maker function. It's very much that capability to make sure that there is liquidity on day one across multiple chains. I don't want to go too much into contractual discussions beyond that, but I just want to let you know that those are in progress, close to the pin. And once those are done, we'll put a date on this and get this thing out the door. Again, the hope is that it will occur before the Joint Appropriations Committee on the 12th.
Madam Chairman?
Go ahead.
You know, from when I recall, we had some conversations that on some of these different blockchains that when everything gets ready and to hit the button, that they would provide some liquidity by buying some different amounts of blockchain to get it in circulation. I'm wondering if that's still in the offing.
So through the chair, Commissioner Marbo, I think what's appropriate for me to say in this context is we're certainly talking to pretty much every foundation that is working on and supporting the blockchains that we've launched on. I can't attribute dollars to them. Those are not contractual obligations or relationships we're going to have. It is going to be their impetus to contribute, but I will say that there is a lot of excitement about what it is we're building, especially because we are specifically well positioned to serve the global remittance use case, and this is a global technology.
Okay. All right. Thank you.
If there are no other questions, what I would like to do is turn it over to our Chief Information Security Officer, Mr. Keith Lohorn, to provide a demo of the Frontier Stable Token testnet faucet. And I will let him provide more details and share a screen on that. But just to quickly tell you what a faucet is, this is a manner by which anyone can go and attain a version of a Frontier Stable Token that does not have a financial backing to it. So these are on different blockchain testnets, and there's no associated reserve. But this will allow, instead of having a pilot program that we are managing and we're limited in our ability to facilitate that, this is a page on our website that is currently live that anyone can connect their wallet to and go and get some Frontier Stable Tokens across not just 7, but even an 8th blockchain. We have incorporated the Hedera testnet into this as we start testing that network for launch in the coming weeks. Keith, if you want me to say anything else, I'm happy to, but through the chair, I would ask that we recognize Mr. Keith Lohorn for the demonstration.
Thank you, Anthony. So yeah, we've got a testnet faucet. This allows developers, anybody who wants to learn about transacting crypto or develop use cases, a self-service tool to be able to get free testnet tokens. It's rate limited to up to 1,000 per day per chain. This will allow for someone to come to the site and choose the blockchain that they would like to develop on and receive testnet tokens.
So what Keith has prepared here is, again, he's requested 100 testnet front, that's the T front, on the base chain. He's put his digital wallet address in that field and simply hit the button to request the tokens. That transaction is already done. He now has them. So Keith, if you'd be so kind as to pull the transaction hash, which is the record of the transaction occurring, and then go to the Block Explorer for base, which is where you can see all these transactions happening in real time. We'll see what that transaction looks like. Once Starlink beams down. And while that's loading, I know Keith mentioned this is something that developers typically want to use, right? So USDC through Circle has this, PYUSD through PayPal and Paxos has it. It's a great way for developers to get on board and figure out how they can implement it into their existing platforms. And to that extent, this is very much an extension of the pilot programs we were already doing. However, we do get a lot of questions as a commission about how people can use this, what technology they need to use it, how it can be used. So this is a great way to play around with things and not really have any risk of messing up, since you can do the transactions and if something goes haywire, you haven't set your digital wallet correctly, you lose your seed phrase. That's a way, there's no loss. This is not an us problem. This is the blockchain indexer going down. So Keith, maybe what I would recommend is going back to our page and just rerunning a transaction on another chain, maybe on Avalanche. So again, it's pretty straightforward. You switch the network and you make the same request. And again, that should be done in just a couple of seconds. Again, assuming this is, yep, there we go. And so we'll go to the Avalanche Block Explorer. And if that one loads, we'll see that transaction.
Just a second.
Yep. And then Keith, as you pull that up, just don't forget before we move on, I do want to just show us at the bottom of this page as well, because we do have some instructions about where the contracts are and how to set up a wallet as well.
Just as you're working on this, I got kind of a question about, if you get a phone and put VPN on it, would the blockchain wallet be behind your VPN?
Through the chair, Commissioner Meyer, my understanding is that the wallet would still be your address, but it would, if someone's tracking your IP, so it would still be your wallet address, the 0x and all the numbers behind it. But if someone was trying to monitor that, the VPN would obfuscate your IP address, i.e. where your computer is located. So it might route through Los Angeles, something like that, right?
Oh, that's what it, okay.
Yep. So this is the transaction on Avalanche. Keith, if you can make that page a little bigger, you can see the transaction hash, which matches what we had on our website. And you could see that the transaction was routed from our wallet to the wallet that Keith included. So you can see there's a transfer of 100 Frontier stable tokens. The transaction fee was 0.0000059 AVAX, which I think is possibly several hundred thousandths of a cent in terms of the transaction fee. And that transaction has already been confirmed for about 2 minutes. There's been 78 block confirmations. So this stuff it's fast, it's cheap. We have it deployed on all the different networks. And that's one of the things we want to demonstrate. So again, it's not only for developers, but for anyone who's looking to experiment with the technology and doesn't want to be concerned about losing dollars that are behind it. This is a way to accommodate that. I'll note at the bottom here that Keith has scrolled to that we note the test networks that we support. We say that these are not available for purchase. They're not backed. We have the contract addresses where our smart contracts are deployed. So again, if anyone wants to see the code that actually governs these smart contracts that facilitate the transaction and govern the Frontier stable token, those are right there. And then there's links to those block explorers as well. And then finally, there's a link to an FAQ page. So Keith, you would just click that quickly. That would route any user directly to our FAQ about adding the testnet front to their wallet. Keith, anything else that we wanted to show off from this demo?
I think that was it. We appreciate your time, and hopefully people will take advantage.
Great, thank you. Any questions from the commission on the faucet?
Would this allow counties and other state agencies to get in there and play in the sandbox and understand whether or not it would be something they'd want to contemplate?
Through the chair, Mr. Treasurer, I think that the answer to that is yes. And I think that's one of the conversations we'll be having momentarily with Mr. Shell.
Okay, thank you.
Before we get to Mr. Shell, we do have one more demonstration. I think this will be even quicker. Keith, if you wanted to pull up the X402 demo there. I'm going to once again try to frame this, and we'll let Keith plug any gaps in my explanation here. But this is not live on our website yet. This is still being developed, but this is a payments demonstration using something called X402. If you have been browsing the internet and you go to the wrong website, you get a 404 error that the page doesn't exist. Essentially built into the fabric of the internet are different gateways and channels that can do certain things or return certain messages. So when the internet was built in the early 90s, a gateway was reserved for payment requests. You cannot proceed until you pay this fee. Now in 1991, when the World Wide Web rolled out, there was no e-commerce and there certainly wasn't blockchain yet. Now there is. So Coinbase, the company, has created an open source standard to allow the facilitation of peer-to-peer, wallet-to-wallet transfers through the 402 gateway. So essentially you could do payments through the very fabric of the internet. So even financial or fintech providers that streamline some of this might get even more efficient in the coming months to years. This is also a lot of the dialogue about how autonomous AI agents will transact is expected to go through this gateway as well. And stable tokens might be a vector by which this occurs. So we've built out a bit of a demo. Keith, I will first let you correct any of the potentially gross misstatements I made about the historical context of the 402 gateway, and then I will let you take it from there.
It was all good, Anthony.
Oh, excellent. Thank you. I've heard it a few times at this point.
So this is not aesthetically pleasing. It's just a quick example we put together. We are working on some examples of the back-end technology that we hope to publish for people to develop and use for demonstration purposes. I'm going to quickly connect my wallet. And I've got a building permit I'm going to pay for. This building permit cost $1. And you see, I have to authorize this payment. I get the payment details. Going to confirm.
And while this loads, again, this is the kind of V1 effort on this. We do have one of our interns, Kayla Sherwood. She's working on a more granular version of this where it'd be like a very specific micropayments example where you can go and pay for, let's say, scholarly articles rather than if you're a college student, you don't have $10,000 to pay for LexisNexis. You can go and essentially just like a shopping cart, pick a couple articles you need for the research you're doing, pay a few dollars for it with a stable token, and get that content. Keith, do you have anything spinning in MetaMask right now?
It's taking a little longer than expected.
Oh, we're doing it live.
Send
It always
failed.
does.
Yeah. All right. Let me choose a different network here. Base.
Give Base a second shot.
Let me just refresh the page here real quick.
Again, this is not deployed on our website yet. This is all on development pages that we're hosting locally. So, bit of a difference there. There we go. All right, well, looks like we have some troubleshooting to do on this one, Keith, but we will do what we always do and just record a demo of this, which was working moments ago. But we will give a demo of this. We'll put it on the social so everyone can see how it works. But Keith, unless anything else from your side, I think we could move on from this one.
Sure.
Great. Yeah, so again, we will still in development, but we will get that up and running. So with that said, I would like to, Steph, do we have the ability to promote Joel Shell to a speaker? Thank you. So Joel Shell is the Converse County Treasurer. He's someone who had noted along the way on social media about the perceived savings for Wyoming citizens, his constituents, by using a Frontier stable token that would obviate some of the fees that people have been taking on from, let's say, credit card processing when they have to go and pay for those building permits or for your vehicle registrations. And we had a chance to sync up, it was just earlier this week, about his perspective on how this technology could be implemented at the county level with different agencies, and we just enjoy hearing from him. So, Mr. Shell, I will turn it over to you.
Thank you, Director Powell. Appreciate it. Good morning, Commission, Madam Chairman. I hope you can hear me okay there.
Loud and clear. Thank you.
Okay, thank you. So, yeah, I'm Joel Shell. I'm the Treasurer in Commerce County. I've been in the office here for 34 years and the Treasurer since 2004. I'm excited about this opportunity to come talk to you about this. I certainly appreciate the hard work of the Director and all the Commissioners in getting this done. This, I think, really can change the landscape of payments and the cost to our constituents. For us, like the county is like any other business, we take credit cards, right? But we can't raise registration fees and property taxes to absorb the processing costs. So we send those costs directly to the customers. And customers hate those fees, right? Not as much as they hate the current design of the license plates. That's our number one complaint. But close behind are the credit card fees. Last year in my office, we took in about 3.4 million in credit card transactions, which cost our constituents about $70,000 in fees that our processors collected. The highest payment we received last year was about $44,500 via credit card. And that was a mineral company that was trying to clear a delinquent tax bill. They incurred about $1,100 in fees. And we have monthly fleet management companies that do registrations with us for about $13,000 a month. So they're paying about $300 a month in fees that they pass on to their clients. So because of that, we're stuck in sort of the check environment. I mean, I think if some of you think about the last time you wrote a check, there's a good chance it was at a city or a county for registration or taxes. We hear that at the counter all the time, that this is, the only place people write checks anymore. And there's some irony to the fact that the most labor-intensive form of payment you can make, checks, is free, while electronic payments incur costs, to the customers. So we're anxious to get out of that climate and to move into something else. And I think electronic payments, especially the stable tokens, would let us do that, get more efficient. We certainly need to grow that sector. The 3.4 million a year that we took in credit card payments is a very small percentage of the $380 million overall that we took in payments. So you can see our percentage of electronic payments compared to the rest are much smaller than a normal business. And that's because of the fees, right? And all counties have portals. Maybe some of you have used them to renew a registration or to pay taxes. And we'd love to grow the transactions we get through those portals, because those are the most efficient transactions we have. Nobody's standing in line to make an online payment as compared to what they do at our counter. But we need to be able to do that and get around the fees. And I think the stable tokens can do that for us. It's exciting to see the demo of the portal that they just shown. The counties that have payment portals, almost all of them do. And we only have 2 vendors that service 22 of the 23 counties as far as their portals go. So if we could put together the APIs or interfaces for just 2 vendors, that would enable almost all of the counties to put a Pay with Frontier button on their registration or property tax portals to allow people to pay without fees, which would be incredible. We'd love to save that money for our constituents. The other efficiency I think we could achieve has to do with the timing of state payments. As you know, Madam Chairman, we shuffle a lot of money back and forth between the state and the counties. Specifically mineral payments, the timing of mineral payments. Right now, the Department of Revenue is taking in severance tax and ad valorem tax payments from the extraction industry. And because the department is so efficient, by November 30th, we will get a report that says this is how much we took in taxes. For us in Commerce County, it averages about $14 million a month. And they'll process then that payment through the state system. We'll get a check in the mail for that about December 5th. And because we received it in December, we'll distribute those monies to the schools and towns and special districts by January. So the money we get that's collected in November, we don't get out the door until January. I have a dream that someday we'll get, along with that report on the last day of the month, we'll get a distribution of stable tokens that allow us to do a redemption immediately, and we can get that money distributed to the folks that need it 30 days earlier than what we do now. And just the overall, I think, shuffle of money, the ecosystem within local governments, we get dozens of ACHs every month from the state. We receive checks for sales tax as well as mineral taxes. We distribute money back to the state. We distribute sales tax to the state. We're distributing registration fees to the Department of Transportation. We're distributing property taxes to the foundation. And I think there's an opportunity there and a vision where someday mineral companies are paying the state severance tax and tokens. Those are being distributed to us. We're distributing to the schools and the counties in tokens. And then maybe we even have employees that want to be paid in tokens. So I think there's a potential to change sort of the landscape and the costs of doing business in Wyoming between all of us. And so that's, why I appreciate the hard work of this committee and Director Apollo so much. And I won't take any more of your time, but I just appreciate the opportunity to express that vision. And with that, Madam Chairman, I will sit for any questions.
Thank you so much, Treasurer Shell. I think it's exciting to recognize, I mean, one of the things we haven't maybe talked about a lot is the benefit to government and how that ultimately makes government cost less and more efficient. And thank you for your service. And I know you'll start hearing about how great the license plates are when we switch to the next ones, as I'm sure you know if you've been there for 34 years.
Yeah, it's just every 8 years. Yeah.
Yeah, thank you. Thank you so much for your testimony. We appreciate that.
Madam Chairman.
Go ahead.
Treasurer Shell, yeah, thanks for your enthusiasm on this. One of the things that we've heard is that some of the counties might be doing, I guess, recording deeds and registration and different things on blockchain. And I don't know whether Converse County, your clerks and commissioners have thought about anything like that, but I think it was Teton County that might be doing a pilot project. But I guess kind of keep your spider senses out there, because I think the more that we can put on this stuff will actually, I think, drive a lot of efficiencies and as you say, help the cash flow situation too.
Yeah, Madam Chair and Commissioner Meyer, yeah, I agree. I think right now, the state of Wyoming is embarking on a project to do electronic titles, and I would love for that to be blockchain centered. And I think just the conversation, the launch, the pending launch of Frontier, I have staff members that are now interested in what a virtual currency is and how it works and how they can participate in the tokens. And so I think those are the conversations going on statewide with local governments and just among the populace. And so I think we really have an ability here to become a state that uses that as a main payment system amongst all of our residents, rural or otherwise. So it's fantastic.
Yeah, and to the extent that you can educate some of the different people that represent Converse County, that I think that would go a long way into adding some stability to the future that you're envisioning, and we are also.
Agreed.
All right.
Any other questions from Mr. Shell? All right, well, thank you again for taking the time earlier this week. A lot of exciting things in front of us. Please do keep us in the loop as you hear those requests from your colleagues, from your constituents about learning more about what a virtual currency is. Please do feel free to route them our way. Stephanie on our team has been doing a lot of training across agencies, and we're happy to keep spreading that message. So thank you.
Thank you. Appreciate it.
Okay, Madam Chairman, I've got one more order of operations request. I'd like to go backwards. It sounds like Zoom was perhaps blocking some critical pop-ups for our demonstration.
Oh, okay. Well, great. If we've diagnosed that.
Yes, so just as a security measure, it wasn't allowing me to confirm the payment while sharing my screen. So just wanted to let you see that. So this is a really simple example. I do want to show one thing really quick that I found. This is the last 30 days. So this X402 is probably a year old at the most, and 44 million transactions, $30 million. So a lot of small transactions, but 70,000 different entities accepting X402 payments. So it's growing very rapidly.
Well, thank you for the context, Keith. Sorry that Zoom gave you some issues. We've been a Google Meet team, so it's been good so far. With that, Madam Chairman, I would just quickly do a verbal update on the stable token industry and the blockchain selection exercise, and we'll go from there. Great. So in terms of the blockchain selection exercise, we do not have any materials this month. Again, as a quarterly exercise, month one is always addressing the criteria. Last month, there were no updates. Month two is working with blockchain foundations and getting any kind of first-party data from their side. There were no submissions this month of net new data. So nothing to present now, but in month three, so at our December 18th meeting, we will provide our own independent assessment of where these networks are. And Stephanie is working with the team over at Inca Digital to kind of automate the dashboard. So all that data that we've been pulling in manually we're going to try to at least start automating some of that. And again, over time, make this more of a repeatable exercise, the click of a button, pulling in data that is sourced from platforms we've been using. In terms of the stable token industry update, I will start with our metrics. The stablecoin market cap is near an all-time high. It's now, or continues to operate at an all-time high, now at $298 billion, up 57% or $108 billion from this time last year. And stablecoins processed $4.94 trillion in monthly transfer volume, which is up about $1 trillion from this point last month when we spoke. In terms of domestic updates, the comment period under the Treasury on the Genius Act closed in early November. There was input from the American Bankers Association and the Bank Policy Institute to close this perceived loophole where stablecoins may bear some kind of reward to the holders. So in the Genius Act, there is a specific prohibition of interest or yield payment for permitted payment stablecoin issuers. However, there are programs where a third party may take in stable tokens, stake them, lend them out, rehypothecate them in some way, shape, or form, generate yield themselves, and then pass that yield on to the customer who deposited or is staking those stable coins. So these rewards programs are available, and there is a push from the banking industry to kind of close the loop on that, as it were. Separately, the Senate Market Structure Bill, the Responsible Financial Innovation Act, a draft of the language from the Senate Ag Committee was released, I think, last week. That focused predominantly on the CFTC's role as a regulator and still has a number of placeholders in it, for example, around decentralized finance. The Banking Committee continues to develop their own framework, intends to merge that in December. And then now that we've had the shutdown for a while, it's not expected the market structure bill will receive any kind of vote until early 2026 in the Senate, and then they'll have to merge with the House and go from there. So there'll be some time. And then just recently, the Office of the Comptroller of the Currency, the OCC, confirmed that banks have the authority to hold certain crypto assets as principal for purposes of paying crypto asset network fees, which is a lot of jargon to say banks can now hold native tokens like Ether on Ethereum or Solana. They can hold those on their balance sheet to pay for on-chain transactions. So a lot of the questions we had last week, Commissioner Meyer, from yourself and from the governor, were about those native fees. This is a way to get banks to start playing with that. And I would personally note, to me, this seems to be the next step after the OCC and the Federal Reserve rescinded some of their guidance around their non-objection supervisory letter from 2022, 2023, that really made it difficult for banks to get involved with this. So we're seeing more and more the ability for financial institutions to get involved with this type of technology.
I guess one of the things that's kind of been in the news is when everything shut down and the feds couldn't get any data. Are these digital assets in the Genius Act, and are they contemplating that the feds are going to be getting data and they're going to have to be the people that actually source it? Or can we kind of change the narrative and say that in digital assets that's going to be generated by industry, and so the feds aren't going to be in there? Because I'd hate to be in the same situation that the economy gets there and we're in the same bucket as everybody else. You know, I would hope that this is all new stuff, as we build it out, we actually get the reports and stuff, whether they're FEC or SEC or anything else, that they're actually generated digitally within the construct of the environment.
So through the chair, Commissioner Meyer, if I understand the question correctly, about the lack of data provided during the shutdown, if these financial institutions are using public blockchains, which we are, that data is going to be public and available 24/7, 365 days a year. If things move towards not a CBDC, because there's really not much dialogue about that in the US, but within the large institutions, if they were to issue their own private blockchains where it's kind of shut off and they're only using it internally, yeah, perhaps they don't share that data. but I think that the momentum is really shifting in the direction of using public infrastructure.
Yeah, so if we can, I guess, going forward, just make it clear that we want to keep that ability to actually be transparent and not be subject to the vagaries of an inefficient, non-functioning government.
Through the chair, Commissioner Meyer, I think that's one of the reasons why the legislature pushed for this to be on public infrastructure from day one. Okay, so moving on, some international news. The Monetary Authority of Singapore announced that they're starting trials of tokenized MAS bills settled in their wholesale CBDC. They are launching further pilots with regulated stablecoins and tokenized bank liabilities, and they plan to implement dedicated stablecoin regulations next year with a focus on full reserve backing and redemption guarantees. In Japan, they have now launched the JPYC stablecoin backed by yen through a company called JPYC Inc. However, there's also a joint effort ongoing from a consortium of banks, including MUFG, SMFG, and Mizuho, to do their own stablecoin. And the UK announced that next year they will introduce a new regulatory authorization requirement specifically for stablecoin issuers. A dual regime will exist, one for systemic stablecoins, which the Bank of England is consulting on, and a parallel regime that will apply for non-systemic stablecoins, which will be regulated by the Financial Conduct Authority on an individual basis. So all that to say is, with all the momentum we've had in the US, some of the jurisdictions like the UK that have been a little further behind, they're bringing themselves up to speed. In Japan, they've had stablecoin legislation for some time. Now they're revising it. So we're seeing everyone kind of chase this path forward. And quick news in terms of our incumbent issuers, Tether announced that USDT surpassed 500 million users globally and anticipates revenues of over $15 billion this year. And Circle reversed their position on the prohibition of purchasing firearms with USDC. So I know that's something we've made a bit of noise about, just, our perspective that any Wyoming stable token should be used for any lawful purpose. And I think that's reverberated through the industry. Okay, any questions on the news cycle? Hearing none, I will move on to our next topic, which is the token management rules. So you do have a couple of packets in front of you for this one. You have the token management rulemaking update memo, which we'll review. I've also included the current draft of the proposed token management rules for your reference. I've also included the public comment that we've received. In the past, we've gone through all comments. We'll address all comments this time around as well, but we'll do that on a summary basis rather than reading through every comment, every word. We are allowed to summarize, and we will summarize, but to take us back to the memo, what we're looking to do here is adopt final token management rules for regular rulemaking as drafted or amended with non-substantive revisions following the public notice and comment period. If there are substantive edits required, we will need to go pretty much to the start of the process and take it from there. But we, at this point in time, do not expect that from our agency team. So we do have the authority to do our own rulemaking as part of our statute. And in terms of the background, we've talked about the importance of token management and putting rules in place for that. We've done similar work with our reserves management rules that were promulgated on July 31st. So we've taken the path forward on the token management side of things. We had a special meeting on August 4th to approve the draft for both emergency rulemaking and regular rulemaking. Emergency rules were approved by the governor and promulgated on September 26th. Those are in effect until January 24th. And then we do have the ability to extend by 120 days if we need to, but there is only one extension opportunity, and that would take us out to, I think, May 24th. The approval to proceed with the regular rulemaking was received from the governor's office on September 11th. Flipping over to page 2, we then started the process of uploading all of our documentation through the Secretary of State's office, having their review. We had the 45-day public comment period began on September 19th. That went live on our website on that date, which was a few days beyond the 45-day requirement. And then we did the push out of emails and social media posts on September 22nd. So in terms of the rule set, as a refresh, Chapter 1 is general provisions. That's our definitions and the abilities of the director and the commission staff. Chapter 2 is cryptographic asset management, which defines the responsibilities of the agency pertaining to the development and deployment of critical policies. Chapter 3 is the token supply management, which compels the agency to develop policies around minting and burning of Wyoming stable tokens. Chapter 4 is the interdiction of WIST, which is the freeze and seize piece. Then we have development operations and smart contract lifecycle, and the management of other digital assets is Chapter 6. So we only received comments on chapters 1 through 4, so stick with those. And we received 11 comments from 8 different individuals, which start on page 3. So page 3, starting with chapter 1, we received a public comment from Ms. Sally Jones. And again, you could follow along with the comment package you've been given. Her comment at a summary level was expressing their concern that Wyoming stable tokens are backed by U.S. Treasuries, which is perceived to be a declining asset in value, rather than gold, which is perceived to be a stable commodity. So the suggested response in this one is straightforward. The permitted investments backing the Wyoming stable token are established by statute. I give the reference for that. That is not under the control of the commission, nor its rulemaking process. So we cannot change statute. So as such, we are not recommending any substantive or non-substantive revisions. Similarly, in the second comment we received from Jonathan Espinoza on behalf of Securitized Markets on Chapter 1, they have also submitted a comment recommending that the commission consider clarifying or expanding the definition, again, of permitted investments, to include tokenized U.S. Treasury securities, such as those offered through the BlackRock USD Institutional Digital Liquidity Fund or the BUILDL Fund. So suggested response here is the same. The permitted investments are the direction of the legislature. That is statute. We don't lobby for statute, and we don't change statute. So it is functionally non-applicable, and as such, no substantive nor non-substantive revisions are suggested. Moving on to Chapter 2, we have public comment from Kodzo Gibeze. This came through in French, so we ran this through the translator. This is someone who expressed they are unable to access their cryptocurrency through their Coinbase account. My serious response is this comment does not apply to the token management rules, and as such, I do not expect to have any substantive or non-substantive revisions on that one. Fourth comment is the first of 4 from Mr. Stefan Muhlbauer. His first comment on Section 3A in Chapter 2, he's proposing, pardon me, proposing an amendment mandating independent third-party security audits to verify the technical implementation of access control, smart contract functions, and cryptographic asset management policies as a new Romanet Section 3, Romanet 5. So our perspective here is that this is commentary that might be better sourced for policy making. It's quite specific for rulemaking, which is meant to be generally applicable, not specifically applicable. And as such, again, we don't think that this would have a substantive or non-substantive need for revisions. I'd also note that this comment and others from Mr. Muhlbauer that we'll see, putting some of his recommendations into rules would compel the commission to start engaging several redundant audit procedures. We already have policies in here that talk about needing to do an audit, and we do have security audits done on our smart contracts already. But one of the concerns I highlighted in our response is this mandating additional efforts to be completed by an external third party could have a knock-on impact to the commission's budget, creating a potentially untenable encumbrance as well, right? So they want to be aware of. Sure, and apologies, I'm getting a little.
No, just it could have what from there. Yeah.
Yep. It could have a knock-on impact to the commission's budget by creating a potentially untenable encumbrance, right? So if our budget is X today and we pass these rules tomorrow, we may need X plus Y to accommodate several redundant levels of audit beyond what we already have.
So we'd have to put on more vendors and different things like that and drive the cost up. Yeah, okay. And would there be any necessarily statute changes? I mean, you've got I guess you got one third-party group looking at it now, and he's wanting two third-party groups to look at it, or somebody to actually look at the third-party accounting and double check and see whether they're right, or?
So, through the chair, Commissioner Meyer, this is specifically around some of the technical details of the smart contracts we've deployed for the stable token. To be clear, we deployed those in tandem with Layer 0, which is the vendor we engaged. Part of the SOW we had with them was they themselves had to get 2 independent audits on the smart contract that we deployed to give us the confidence that it would work as intended, which we have. The feedback from this gentleman who's at a company called Chertic, which does this type of work, their feedback is much more specific about where these audits should be happening or mandating where these audits should happen. But again, this is kind of demonstrating rules versus statute versus policy. The work we're doing on the ground is to get these audits done, right, as part of the SOW process. But if there's additional audits added to the scope because of rulemaking, that could add essentially an expense that we don't have a budget to pay for, right, is my concern here that I've looked to.
I guess my question would be, is this double auditing a characteristic of other stable coins, or is it an alternative, or what? How would you characterize that?
So, through the chair, Commissioner Meyer, I would argue that you're not perpetually auditing your smart contracts. You want to do them incrementally or on a certain cadence, right? As the technology that you're building on top of changes, you want to make sure that your code base doesn't have any vulnerabilities that may be introduced by updates somewhere else. So that is, what many companies do, but those are institutional scale companies. I think I've brought up something similar before, talking about the on-chain analytics providers. Any exchange of sufficient size and scale has multiple on-chain analytics providers engaged because they use different algorithms to monitor and identify transaction types and potential risks. So they bring in all of these, 4 of them. We don't have the budget for 4. We have the budget for 1. So we're engaging 1. Right. Now, over time, we might want to engage more, but we would do that through a procurement process, not through rulemaking.
Right.
Is the point we're trying to get at here.
So as far as the process that we have in line to identify the need to update contracts, what is that?
So, through the chair, Commissioner Meyer, from a technical perspective, we would be the party responsible for those updates. Because while we had assistance from Layer 0 and Fireblocks for the initial deployment, one of the things that we've done along the way is make sure all of the authorities to do anything with our smart contracts have been transitioned to the commission, right? We don't want third parties having control over what we're able to do. So technically, we're responsible for it.
Third parties could recommend that when one of these vendors of ours could say, it's time to get this done, and then we'd have to do it maybe perhaps in a basis that isn't just monthly, or
Through the chair, Commissioner Meyer, I would generally agree with that statement, right? If they were to push some large code-based change on their side, and we have their code, we have our own instance of it,
right,
but we'd either want to get the latest and greatest from them, maybe through new SOW, or maybe we want to update it ourselves. We'd want to see an audit on their side and potentially do an audit ourselves too.
Right. Okay. I'm just making sure that we have the communication processes that are in place. We know what's going to happen when something needs to happen before it actually happens. That's where you need to look at it. Okay. Thank you, Mr.
And through the chair, Commissioner Meyer, just to put a bow on that, I think that rewinding the clock 2 months to the commission's motion, kind of compelling us to look at some redundant possibilities as we scale, that fits right in there. But I want to do that through procurement and our monitoring of the ecosystem, not through rulemaking. Okay. moving on to the second comment from Mr. Muehlbauer, it's very much the same, still in chapter 2, now on section 4. Commenter recommends requiring comprehensive incident response and disaster recovery plans that should be reviewed and updated at least annually, tested through mandatory scenario-based exercises, and subjected to independent third-party review every 2 years. So again, we've pointed out that this wording is what we would expect to do in policy, not rulemaking. We already, in the rules, which I threw somewhere, already compel the commission to create a incident response and a disaster recovery policy. So again, the feedback in here is well taken, and we could certainly fit some of this into policy, but we would do it there rather than through rulemaking, would be the response here. Any questions on chapter 2? Okay. Moving on to chapter 3. We got one interesting one here. Before we put the authentication on the submission form, we got a comment from Donald Trump, or someone purporting to be Donald Trump, telling us that, expressing their desire to see the Wyoming stable token deployed on the Aptos blockchain and delisted from all other blockchain networks. So that comment does not apply to the token management rules, and I do not recommend any substantive or non-substantive revisions suggested. I'm sorry, Madam Auditor, you might have lost the bingo card on that one. And then we did have 2 more comments from Mr. Muehlbauer on chapter 3. The first on section 2A. Commenter recommended requirements of independent formal verification for smart contracts that handle minting and burning. They also propose mandatory post-execution reviews and public reports for non-standard minting and burning events, and urges a direct technical link between these functions and secure governance mechanisms. So again, this is great context for us to have during the policy drafting. It is highly specific for rulemaking, again, would compel us to take on additional cost through rules rather than procurement. And I would note that when we say formal verification, that is essentially a type of audit. I've already spoken with Mr. Lawhorn about what that looks like and when our agency should approach that. High level between, that discussion was if we were to roll out a yield-bearing version of a Wyoming stable token, and that required customization of smart contracts, we'd want to have formal verification at that point in time. Again, that's our build, our procurement, not rulemaking. And the final comment from Mr. Muehlbauer, very much the same. This is now on section 3A in chapter 3. Comment proposes strengthening operational security measures by formalizing annual independent security audits of smart contracts and cryptographic governance code, especially following upgrades. Additionally, advises integrating real-time compliance tools to meet anti-money laundering, AML, and counter financing of terrorism, CFT, requirements in token transfers and network bridging. So again, great context for us to incorporate into policies along the way, but policies and procurement, not rulemaking. Any questions in chapter 3? Okay, moving on to chapter 4, which is the last chapter that had comments on it. This one is received from Jim Harper on sections 3 and 4. Commenter stated their perspective that Wyoming stable token is an asset that is subject to seizure as readily as allowed by proposed chapter 4, is not property that can be owned by a token holder. Rather, it is something owned by the Wyoming government and merely licensed for use of holders to be retrieved on various bases laid out in the regulation. This is perceived to be in contravention of the statutory definition of virtual currencies as property. So counterpoint here from our side is that section 4 compels the commission to seize tokens in the event and only in the event that the commission is delivered a final lawful legal directive, which is defined as a final judgment issued by a judicial, administrative, or regulatory body having jurisdiction over the commission. Said regulatory bodies can and do seize property, And Section 4C states that no seizure can occur by the commission without such directive, and therefore should not be categorized as readily allowed seizures. The commission does not believe any non-substantive or substantive changes to the rules are required based on this comment. So this is coming from, just generalizing greatly here, this is the perspective that we have too much ability to interdict Wyoming stable tokens. Our position is we've been quite diligent to not be in that position. If there is a seizure order, which this comment specifically talking about seizure is about, we can't do that unless a court of law that has authority over us tells us to. And if we don't get that, we don't seize the tokens. In that capacity, this is a lot more restrictive than the private incumbents. So that's the perspective that we have amongst the team here. And then we'll flip over to the counterpoint with our public comment received from Jonathan Reiter on section 3B Romanet 3 of the rules. Now this is on, let's see, the freezing of tokens, right? The last was on the seizing, this is on the freezing. Commenter proposes amendments to empower the commission to freeze tokens based on information from anyone rather than only parties that are, quote, contractually supporting WIST on behalf of the commission, if the party providing the information can satisfy the commission's position that WIST is being used for illegal purposes under federal or state of Wyoming laws, rules, or regulation. So section 3B Romanet 3 is the section in which if the director reasonably believes, based on the advice of commission staff, licensed service providers, legal counsel, government officials, or entities who are contractually supporting WIST on behalf of the commission, that WIST is being used for illegal purposes under federal or state of Wyoming laws, rules, or regulations, that then allows the director to freeze Wyoming stable tokens in someone's wallet. Also, I'll note in section 3C Romanet 1, if there's no legal directive to extend a freeze beyond 30 days, we have to relinquish the freeze in 30 days. So again, we're being very conservative about how we're able to do these actions. This commenter's perspective is that we've carved out a limited group of parties that will take that advisement from. If it's not coming from a temporary lawful legal directive from, again, a regulatory body, we're only going to do a seizure if one of our licensed service providers who's looking at these transactions on a day-to-day basis, that is their job, tells us that we've identified this as, for example, a digital wallet associated with the Lazarus Group in North Korea. We might get that phone call, and we might get that phone call before the Office of Financial Asset Control updates their SDN list, their designated national list, the next day. At that case, that point in time, we would go and do a proactive freeze. The intent is not to start freezing tokens when someone picks up the phone and calls us and says, I think something is happening over here. If that's, if people have evidence, they could work through the commission, they could work through the licensed service providers, they could work through other regulatory bodies. But the intent here is not to entertain everyone who wants to freeze someone else's tokens to put that authority or that responsibility on myself almost individually to do that and bring that forward.
It sounds like to me a little bit like they want to turn us into a judicial commission rather than an operational commission, and that we would get into circumstances where we would be debanking people based on opinion of an agency, and the agency is fairly, I don't believe it's very well defined, but frankly, I don't believe even if the FBI called us up, you can't necessarily trust the federal government. So, I think what we're saying, and really you can't trust the FISA courts, so I don't believe that we should do it on a FISA court, So, I mean, it's really, to me, it's like it's a federal district court or a Wyoming district court that might be able to do it. But even the federal district courts, they're not the ultimate. There's a lot of district courts, federal courts and appeals courts essentially are politically motivated to debank people. And so this whole thing during the last administration where a lot of people were debanked just, by a court order that had absolutely no relative thing except that you were in the wrong political party. So, I think we got to be very careful, about what we do in these circumstances, and if it's, if that stuff is out there and as bad as they say it is, it's probably been going on for months. And a 24-hour period probably won't make a lot of difference to get it in front of a court of competent jurisdiction that essentially that doesn't turn us into a judicial branch.
Through the chair, Commissioner Meyer, that point is well taken. We are not an enforcement agency, right? And I think that's a very astute point that you made, because we're not meant to be judge or executioner. This is not particularly a responsibility I want to hold either, but we have to, right? Because there needs to be some outlet by which, if we're made aware again through the partners we've specifically engaged to detect this kind of activity, if they tell us so and that this is happening, we need to be able to act and act quickly. But beyond that, the intent of these rules, which we made quite deliberately, and I would argue that our user agreement that permits the Frontier stable tokens use for any lawful purpose, we spent a lot of time thinking through how we would structure this for this exact purpose, to limit the amount of interdiction that we would need to do.
Well, and I think you noted this offline, as far as our roles as commission members going forward, potentially approving these rules. I would note that we have one comment that says you should never be able to freeze or seize the token, and one that says you should be able to freeze or seize it much more freely, which means which probably means the rules are in a decent compromise place if everyone is ever so slightly unhappy, from both of those relative different positions.
Yeah. And I would concur, Madam Chairman. So keeping us moving along here, I think there's one more. Yep, number 11. Public comment received from Walter D. Clapp. This one's a little bit longer because there was a number of bullet points that were put forth. So we'll take some of them one at a time and some we'll summarize. So his first comment asserted that the proposed rules were insufficiently noticed by lacking a regulatory takings statement, citing Wyoming Statute 16-3-103, subsection A, Romanet 1, subsection H. Bless you. So we did talk about the 45-day comment period. We're covered there. In the notice of intent to adopt rules, there's a box that says check 1, and there's an A and a B, and we checked one of the boxes in A, not one of the boxes in A and B. So that was an oversight on our part, which can and will be corrected when we file these formally. That's not a rules comment. That was just a procedural edit. But I will note that the takings checklist was completed and reviewed by the appropriate agencies. And to my knowledge, there's nothing in statute that says the takings checklist has to be in a notice document, right? So it's something that can be provided, but it's not mandatory. So we'll fill in the box that we need to, and if to the extent the takings checklist needs to be put forth somewhere, we can do so. But that's not a comment on rules. And that, to a certain extent, will be the management committee, when they look at that, they will make a determination of whether that passes muster or not as well. Second comment on here, commenter asserts there is a lack of opportunity for pre or post seizure deprivation hearings. From my perspective, I'm not clear what a pre-seizure deprivation hearing is. I don't know how you have a deprivation hearing before you seize something. But I reiterate here in this response that the commission can only perform a seizure subject to a final lawful legal directive, as we just mentioned. So any kind of hearing would be with one of those bodies, right? That was giving us the order, not with us necessarily. Comment 3, commenter asserts the executive director has the authority to unilaterally effect a government seizure of an owner's intangible personal property. I want to note that this is an inaccurate categorization referring to the director's ability to freeze tokens for up to 30 days. The director has no such authority to seize tokens. Seizure can only be effectuated by a final lawful legal directive, again, as specified in section 4. And then in comments 4 through 7, commenter asserts that certain terms are undefined or indistinguishable from each other. I've noted that the terms temporary lawful legal directive, final lawful legal directive, seize, and freeze are defined in Chapter 1, general provisions, and that terms such as advise and request have meanings associated to them in the context of the rules. Advisement is not a request. Advisement is you say, I have this information for you. Request is you tell me to do something. So I think those are written as such in the context. So we're not recommending any substantive or non-substantive revisions for this swath of comments either. Any questions on the comments received or the proposed responses?
And just to be clear, Director, you've worked through with legal counsel to make sure we're adequately addressing all these and not,
That's
just
correct, Madam
disregarding them. Great, thank you.
If that's the case, then by next steps, we would look to adopt the final rules by majority vote of the commission. Agency resources will provide a summary of the comments with commission responses to those persons who requested responses. The executive director will continue to exercise the authority to pursue regular rulemaking for the token management rules, inclusion of completion of any forms and the interagency collaboration required thereon. So the director's recommendation would be to make one motion to adopt the final token management rules under regular rulemaking as drafted, because we didn't make any substantive changes or non-substantive changes. So I will leave that with the commission.
Okay, so the director's recommendation, these have been out for the required period. We've reviewed the comments and those will be appropriately responded to. The recommendation is to pass the token management rules. Any discussion, or I would entertain a motion if someone is ready.
So moved, Madam Chair.
Madam Chair, I would second. And if it's over for discussion now, I guess I would ask the director if there's any recommendations that he may have.
Through the chair, Commissioner Meyer, myself and the team do not have any recommendations at this time. When we were going through the reserves management rules, there were a few grammatical nits we found during this review process. We did not find anything that we wanted to update from our side.
And so I guess I asked the maker of the motion that the motion included all the grammatical corrections.
Is that okay?
So let me correct my statement if that was misunderstood. I apologize if I did not explain that well. We did not make any edits to the rules that are at hand today. I'm referring to the reserves management rules we passed in July.
They had the grammatical.
Those
errors.
had the grammatical errors that our team made.
All right.
For
As
this
we
go
stand
around.
in front of us, everything is locked and loaded.
Yep.
Okay, thank you, Mr. Chairman. Mr. Director, Madam Chairman.
Okay, any further discussion from any of our commissioners online? Okay, I'll call for the vote then. All those in favor?
Aye.
Aye.
And any opposed? Okay, motion carries. Thank you.
Thank you, Madam Chairman. Last one for you. So this is the listing exchange policy, should be the last packet you have in front of you today. This is a document that our team drafted and our Chief Risk and Compliance Officer, Deborah Brooks, had put a memo together, I think for her work on that we've converted into a policy. To frame this appropriately, as we've talked to some of the licensed service providers, particularly those who may function as an exchange, we've dug into the technicalities of how they work and what their relationship would be as a licensed service provider providing services on a contractually executed agreement with the commission. What we found is that there are some exchanges that, while you can facilitate a purchase and sale on their platforms, they do not at any point in time take possession of the dollars going back and forth or the tokens going back and forth. And as such, there's no need for commercial agreements there because we're not charging them fee, they're not charging us any, they're not asking for revenue points or any kind of revenue share. So we've taken a look at the different kinds of venues where tokens may be transferred, the level of oversight we may have over it, the level of control or ownership one of these platforms may have, and draft this memo. So I will walk us through this, and I would invite Deborah Brooks, our Chief Risk and Compliance Officer, tag in at any point and raise a hand and we'll pull her in. So first page is all preamble, noting our authorities by the Stable Token Act, and specifically where we have the ability to issue tokens. That is fairly broad, and our ability to manage them. We talk about the licensed service providers and the definition that they're any entity where we haven't executed an agreement. And then we've also done a compliance check on them, the KYB process. And that was defined in the reserves management rules. Next piece, because Front, or any Wyoming stable token, is a digital asset in a predominantly decentralized environment, Front may be listed on a platform or exchange that is not a licensed service provider, herein a listing exchange, as there may not be a commercial agreement between the Commission and the listing exchange. The Commission does need to document the nature and status of the relationship between the Commission and the listing exchange, absent a contractual agreement between the parties. And as such, we've put together this listing exchange policy with the enumerated powers of the Commission, Director, and Senior Leadership as defined herein. So the introduction characterizes our relationship with the licensed service providers, again, reiterating that they are contractually engaged and we do a know your business check on them. Second bullet here, through our discussions with licensed service providers, we identify that some exchanges may simply host or list the token for purchase or sale without taking custody, and they rely on third parties for the buy and sell function, i.e. market makers, who are deploying capital and buying tokens with it on the platform to actually facilitate the purchase and resale. And again, we do, to be very specific, not as part of this memo, but we do clarify that and consider market makers to be licensed service providers that must go through the KYB process. So those become LSPs. As such, we developed a path for listing exchanges to participate in the instance in which they do not maintain a treasury for Front. So, yep.
Madam Chairman, would a market maker necessarily maybe a financial institution that doesn't take ownership, but essentially facilitates the transaction? And if that's the case, we have no I guess I'm trying to figure out, define a little bit what a non-licensed facilitator looks like.
Through the chair, Commissioner Meyer, a non-licensed facilitator is just code, computer code, right? So if you look at we'll talk about decentralized exchanges in just a second, but you have the ability to exchange things with people through these platforms that aren't
you can go
owned
wallet
by
to wallet, and that's the okay.
Exactly.
All right. Okay. Well, that kind of explains it. That you're just basically taking $100 bill out of your wallet and giving it to somebody else, only it's in digital form.
In a way, I think one thing that might be helpful before we even dive in is define what a liquidity pool is, because we do reference the term liquidity pool in this policy. Liquidity pool could be on a platform, a decentralized exchange. Again, I'll use Uniswap as an example, where there is a pool of funds. There's typically two different cryptocurrencies in there. Let's say 50% of the pool is Frontier stable tokens. 50% of the pool is USDC. Both of them have a value of $1. So that keeps our example easy here. But if I had Frontier stable tokens and wanted to go get USDC, I could access this liquidity pool on a decentralized exchange. I could contribute 10 Frontier stable tokens to that pool and pull 10 USDC tokens out. And that's all automated through computer code.
Okay.
Now, a market maker would be different than that. They're essentially existing on exchange, but they're deploying actual US dollars to buy tokens, and they're deploying the dollars to create liquidity or provide that liquidity. They buy tokens, and then they also they can help stabilize those liquidity pools across different platforms as well, right? So what you don't want to have happen is there's a lack of liquidity of a desired stable token that people are willing to pay more for. So they could deposit, let's say, a cryptocurrency like Ether on the Ethereum blockchain to a liquidity pool that is partially Ethereum, partially Frontier stable token, and they can put some amount of ETH in, and the stable token they withdraw is worth $3 instead of $1 because the liquidity is off kilter, right? So
they basically mark off the price of Ethereum for the price of the stable token. That's done with a computer program or whatever, and there's no fees exchange. It just happens.
Commissioner Meyer, that's correct. It depends on the venue, the specifics of it, but that's generally correct, yes.
Okay, yeah, or gas fees or whatever and different things.
Exactly.
Yeah, okay.
Exactly. So the purpose of this policy is in the instance in which we cannot compel listing exchanges to undergo a KYB review, setting up what our oversight and categorization of those exchanges looks like. And then we get into the substance. So we define a listing exchange as a exchange or platform that merely lists or offers front tokens on an exchange, brokerage, marketplace, or other platforms absent an executed agreement with the commission. And then we've categorized listing exchanges into 3 segments. One is a direct listing exchange, which voluntarily submits to and successfully completes the commission's KYB review. A direct listing exchange will undergo routine monitoring consistent with the commission's policies and procedures and may be listed as a partner on the commission's website, right? So that's essentially someone whom we may not have a commercial agreement with, but wants our seal of approval that we've reviewed their beneficial owners, their code base, any ongoing legal situations that may or may not be applicable. If they're willing to share that with us and we take the time to do the compliance, we'll give them that essentially certification in a non-legal sense, but we'll say that these are the direct listing exchanges that have gone through our scrutiny, and we'll link to them on our website. There's a second category here called government regulated listing exchanges, which are listing exchanges that may not choose to undergo the commission's KYB review, but are regulated by a foreign or US-based federal or state banking authority, such as the Wyoming Department of Banking, the Federal Reserve, or the OCC, and the listing exchange's charter or license is not currently subject to an enforcement action by any applicable regulatory authority, subject to the review of the commission's staff. So that's something that we noticed as we went through the process, that a number of these organizations have already gone through certification processes with government bodies, some in the same state. And we have the ability and opportunity to look at money transmitter licenses or other regulatory oversight they have and certifications they've received. And the final bucket here is the indirect listing exchange, which is a listing exchange that lists frontier stable tokens on decentralized exchanges or liquidity pools, operating without a single senior management team or central governing authority. So again, computer code. Indirect listing exchanges shall be subjected to a negative media monitoring and not mentioned on the commission's websites. This is essentially a internal classification we've created, where if we know that stable tokens are on these indirect listing exchanges, it doesn't mean there's anything natively wrong with that, but it does mean we need to increase the scrutiny on them through, let's say, our open source intelligence partners or with our on-chain analytics. So in the instance that we are reviewing a government-regulated listing exchange, commission staff shall conduct the following reviews promptly after being made aware that entities, review them before or promptly after being made aware that entity serves as a government-regulated listing exchange. So during onboarding, we'll review their website, social media, press release, regulatory filings, confirm all of the legal entity data, name, status, check FINRA if applicable, locate and check names of natural persons in key positions, so that's your ultimate beneficial owners again, and review those names against the OFAC sanctions list, check for adverse media or negative news. If the entity is US-based, we can look at the nationwide multi-state licensing system, which is NMLS, where they have the money transmitter licenses and consent orders listed. For financial and market standing, we can look at official regulator websites or public court records. We can request from the prudential regulator of these exchanges that we have a certificate of good, that they have a certificate of good standing on file with their applicable charter or license. And we also would look to confirm the existence of any enforcement actions that are ongoing. We can obtain reports or relevant information from contracted vendors, including open source intelligence or on-chain analytics. And then we would document and maintain records consistent with Wyoming record retention schedules. Once the onboarding is complete, we will continuously screen that exchange's known corporate entities and key personnel against sanctions lists, politically exposed persons, adverse media, and use our engaged partners and their tool sets to continue scrutinizing the transactions. So in summary, there is an indirect relationship with these government-regulated listing exchanges and us. So we need to focus on mitigating systemic risk exposure via a public information-only enhanced due diligence program. We support continuous screening, so it's not a one-time process. This is something we'll do on a recurring basis. And we will maintain a clear, defensible, and risk-based approach to managing an indirect relationship between the Commission and government-regulated listing exchanges. So with all of that said, before answering any questions, I would quickly turn it over to Ms. Brooks. If there was anything that I missed, I ask that she be recognized by the chair to fill in the gaps.
Go ahead, Ms. Brooks.
Can't hear. Deb, we can see you. Well, we can see that you're here. We can't see you. We can see that you're unmuted, but we can't hear you. All right, well, I know she's been struggling with tech on her side for a bit. So I'm happy to answer any questions. If she's able to tag back in, then have her back in.
Any questions for the director surrounding the proposed listing exchange policy? Would you mind just refreshing us? This is a policy, it isn't rules.
Yep.
We've passed other policies. The procedure has been let me say this out loud and then you can correct my memory. The board has generally approved the initial policy, but then the director also has leeway to update the policies, but then must update the board of any changes subsequently. Is that accurate?
Madam Chairman, that is 100% correct.
Great. Okay, thank you.
And I know it's not on here with the kind of stamp for approval, but we have it on the back for document history. I felt that having another memo on top of all the other paperwork that said a lot of the same preamble would be redundant.
Okay, if there's no questions in the room or online, I would entertain a motion to approve the listing exchange policy.
Madam Chairman, I would approve the listing exchange policy. I guess it's the November 20th, right? Yeah, dated November 20th.
I would second.
Okay. Any further discussion? Okay, hearing none. All those in favor say aye.
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 And any opposed? All right, thank you.
All right, Madam Chairman, that would take us towards the end here. I'm happy to go through super quickly next steps. I will get the exchange policy, the listing exchange policy uploaded on our website as a V1. We will move forward with the full promulgation of the regular token management rules. We do still intend before the end of the year to have the cattle proof team do a demo of moving essentially the data that they post on chain with the Frontier staple token. Launch the token, it's a pretty big one. And then we've got the budget session coming up. So in terms of that, as you've mentioned before, joint appropriations, our hearing is December 12th at 11 a.m. here in the Capitol, room E301, that's the third floor. That is then followed by the fifth meeting of the Select Committee on Blockchain, Financial Technology, and Digital Innovation Technology on December 15th. So we do have one more cut of amendments and other items that may fall on the docket for that. And then our final regular meeting of the year is December 18th, same time, same place. And then any further comments on that?
Sorry, what was that?
Any further comments or questions from the commissioners?
Don't leave yet. We have public comment.
Yes. So public comment, duration will be limited to 3 minutes per speaking party or one question from an online participant. Speakers will be asked to provide their first name, last name, and affiliation for the public record per Wyoming Statute 16-4-403B. Decorum will be governed by the rules and standards of Management Council Policy 1803 and Wyoming Statute 16-4-406.
Okay, I'll first ask for any public comment from the room. Hearing none. Stephanie, do we have anyone online that would like to provide comment? Okay. With that, I would close public comment. Anything else for the good of the order? All right.
Move to adjourn.
Second.
Any discussion? All those in favor?
Aye.
Opposed? All right, thank you. Could be an exciting